In today's video, I'm going to take a look at the gold market, and I will tell you that it's been boring recently, but this is where we originally had a time and price setup. Okay, this is the June contract, and we had, let's see, a price cluster that came in 1657.20 to 1666.80, and at the same time that we tested this key support, we had timing for a low. And we never made the target off of this area. Okay, so the potential target was going to be up here. Actually, it's still valid because we're still above that area. So that's something to keep in mind. But you did see an initial $97 rally from that last low. Okay, so what are we going to look at here? Well, this recent retest, after we saw a retest basically of this original setup decision and not break it, we did see renewed buy signals. So we have seen those signals, and at this point, you can still risk underneath either this last low or, this original support decision. But let's look at the lower time frame chart and see what that gives us. Okay, so simply a 618 retracement. Okay, so after we did see, a move off of this area, we did see the moving average crossover. You did take out a prior swing high. What we're watching at this point is this 618 retracement. If we continue to hold above this retracement, then our initial upside targets off of this swing come in at 1734 and then 1744. And then also in the bigger picture, if we continue to hold up, then there's going to be larger targets that'll come in off of this swing. And then also the bigger picture targets, and that's going to be off of the much larger swing, which would be here. So bottom line, if price continues to hold above this 618 retracement on the 120-minute chart, I'm still going to look at buy signals with the definition of risk just below that area, with the upside relatively healthy. You do have these swings off of the smaller pullback, and then again you have targets up at 1788, 1816, 1822. I will consider myself wrong if it takes out that 618.